Let's talk to Eddie Tofpik. He's the Head of Technical Analysis and Senior Markets Analyst for ADM Investor Services International Limited. Morning to you, Eddie.
Good morning.
Right, let's talk about gold. What are the charts telling you?
Well, we've seen a number of tries down to that 1300, and to be honest, I don't think we're going to go there again.
Right.
I think you're seeing the medium moving average is 1311, holding the market up, and that's actually curving it now slightly higher. The long moving average is advancing rapidly-ish, and that's at 1295. So it's going to go over 1300. Both those are going to push it above. You've got the moving average, the 50% Fibonacci level at 1305 area. So both of those, three of those things are actually supportive of the market going higher. Why is it not going higher? Because we've got some real good action around about 1365 down to about 1360. And the only thing I'd say that's negative, that's bearish about this, is the highs are getting lower.
Right.
Which is usually a sign of that happening. But I'm not necessarily concerned about that, because I think overall this market, all the trending of it is heading back up again. And I think you'd need to look at that to see if it's going to go.
Okay, let's move on to crude oil. What are your thoughts here?
Well, on that one, it's not dissimilar in many ways. You know, the two moving averages have been holding the market up. The medium moving average, which is 6107, that's been good. We ran up, though, into some really heavy resistance, and that's just around underneath $67. And there's minor Fibonacci areas. There's a 50. It's a combination of a lot of things, and there's a possibility for a double top. It's failing at the moment because the action of yesterday was really, really significant. It went down below the 50% Fibonacci level, 63.38, and then closed way up again, like a bull hammer. Now, not all the time bull hammers tend to be bullish, but in this particular instance, it's showing signs of that it had a try down, a key reversal earlier this week, down. It tried down again,
yep,
didn't like it,
right,
and has gone back up. So it may be that I'm not necessarily saying we're going to go back up to just under 67, but I think we're going to have a little test back up again at the moment before, if we do see an attempt at 67 or back down, but it looks slightly higher.
Okay, let's wrap up with my favourite chart, copper. Any movements here?
Now, remember I said to you this was the most boringly mixed up.
The coil.
It looks simple now. It's simple. It's got a shift pitchfork, which started in January, which is at 66.55. That's the angle of attack of the market. The medium moving average at 69.46, the 50% at 69.09. Those are resistance. Yesterday, we had a huge move down and closed back above the moving average, medium moving average, below again. And then we've gone back above it today. So the long moving average is acting as an attractor at the moment, but the actual angle of attack of the market is that line you can see going down through the center at 66.55. All that arc is sort of more or less finished. We're arcing now properly down through this Andrews pitchfork.
On that note, Eddie, we ran out of time.
Thank you very much
indeed.
indeed.
Next week. Thank you.
Thanks.